Please read the disclaimer carefully before access this video content further. U.S. stock surge. The S&P 500, Dow Jones Industrial Average, and Russell 2000 achieved their largest monthly gains of 2024. The Dow ended just shy of the 45,000 milestone, while the Russell 2000 climbed roughly 11%. The S&P 500 closed above the notable 6,000 mark for the month. PCE data release. Inflation data indicated a slight rise, with the core personal consumption expenditures price index increasing by 2.8% from the previous year, moving away from the Federal Reserve's 2% goal. This could influence future interest rate decisions, with expectations of less aggressive rate cuts by the Federal Reserve. Derivatives markets suggest a 2/3 chance of a December rate cut. However, strong economic performance may pause further cuts. For next week, key data like construction spending and the jobs report will guide investor sentiment. President-elect Donald Trump has signaled his intent to overhaul North America's trade dynamics, proposing 25% tariffs on imports from Mexico and Canada and additional tariffs on Chinese goods. Citing concerns over illegal immigration and fentanyl abuse, Trump aims to pressure U.S. trading partners to renegotiate terms. The proposed measures could disrupt the recently established USMCA, a successor to NAFTA, as well as escalate tensions with China, where existing tariffs already average 15%. Both Mexico and Canada have indicated potential retaliation, emphasizing the economic risks for key sectors such as automotive, steel, and agriculture. The broader implications of Trump's trade threats include heightened global economic uncertainty and potential consumer cost increases. Economists suggest the tariffs could be a negotiating tactic to extract concessions on non-trade issues like immigration and security. Mexico and Canada have taken steps to address U.S. concerns, such as combating opioid trafficking. However, if the tariffs materialize, they risk unraveling decades of tightly integrated supply chains and trade practices, particularly in the North American automotive industry, and could reignite retaliatory trade measures seen during Trump's first term. The Russian ruble experienced a notable decline last week. The U.S. imposed new sanctions targeting Russian financial institutions, including Gazprom Bank, one of Russia's largest banks. These sanctions are designed to further isolate Russia's economy, particularly affecting its ability to process international payments for gas exports, which is a significant revenue source for Russia. Speculation in the forex market played a role, as mentioned by Russia's economy ministry head. Speculators, anticipating further economic pressure, might have triggered sell-offs which contributed to the ruble's depreciation. Russian central bank intervened by suspending planned purchases of foreign currency until the end of 2024. The Brazilian real hit an all-time low against the U.S. dollar, breaking through levels not seen since the onset of the COVID-19 pandemic. President Lula da Silva's proposal to dilute spending cuts with tax relief was met with skepticism by investors. This led to a lack of confidence in Brazil's fiscal discipline, prompting capital outflows. The markets were expecting more stringent spending cuts, which were not forthcoming in the proposed fiscal plan. The Brazilian real depreciation was exacerbated by poor liquidity conditions before the holiday season, which tends to amplify market reactions. Trend of yen turned bullish this week. There has been a growing expectation that the Bank of Japan, BOJ, might raise interest rates in the near future. Tokyo's inflation rate accelerated more than expected in November, climbing 2.2% year-over-year, which has bolstered bets on an interest rate hike in December. This anticipation of tighter monetary policy tends to support the yen as it makes holding yen more attractive due to potentially higher returns. Argentina's economy, after 2 years of recession, is projected to rebound in 2025 with a GDP growth of 3.5%, driven by a private sector-led recovery spurred by President Javier Milei's aggressive economic reforms. These include significant cuts to pensions, subsidies, and regional transfers, which have reduced inflation and are expected to boost household spending, exports, and investment as regulatory burdens ease. Milei's reforms, coupled with strong popular support and improved relations with U.S. President-elect Donald Trump, have also led to a substantial rally in Argentina's bonds and equities, signaling optimism in financial markets about the country's recovery prospects. While progress has been made, some investors remain cautious about the country's economic prospects. Walt Disney stock has surged over 25% this year, supported by strong earnings and 2 consecutive quarters of profitable streaming. CEO Bob Iger executed a Rule 10b5-1 plan to sell 372,412 shares, timed with the exercise of stock options set to expire on December 18. Under the plan, Iger acquired the shares for $34.3 million at $92.24 each and sold them the same day for $42.7 million at an average price of $114.57, netting a significant gain. He now holds 226,770 Disney shares personally and 20,724 through a 401k. This marks Iger's first stock sale since returning as CEO in November 2022. The Biden administration has proposed a rule requiring Medicare and Medicaid to cover anti-obesity medications, including popular drugs like Wegovy, Ozempic, and Zepbound, starting in 2026. The coverage would apply to individuals with a BMI of 30 or higher, potentially benefiting 3.4 million Medicare beneficiaries and 4 million Medicaid enrollees. This measure aims to significantly reduce out-of-pocket costs for patients, cutting expenses by up to 95% for some. The White House highlights the health benefits of these drugs, such as preventing type 2 diabetes and reducing cardiovascular-related deaths and illnesses by 20%. However, the proposal faces financial and political hurdles, with an estimated taxpayer cost of $35 billion over the next decade. Medicare coverage alone could add $25 billion, while Medicaid expansion might account for $14.8 billion. Current Medicare restrictions on weight loss product coverage and opposition from political figures, including HHS Secretary nominee Robert F. Kennedy Jr., pose additional challenges. The incoming Trump administration's position on the proposal remains uncertain, raising questions about its implementation. Dell reported quarterly revenue of $24.4 billion, which was below Wall Street's expectations of approximately $24.7 billion. However, the earnings per share, EPS, came in at $2.15, surpassing the consensus estimate of $2.06. This indicates that while the top-line revenue growth did not meet expectations, Dell managed to exceed profit forecasts, possibly due to cost management or higher-margin products. Dell shares price dropped over weak guidance. Thank you for watching this video. If you like the content, please subscribe this channel by clicking the subscribe button for this channel for any future updates.